Well, all right. I'm sorry for the hiatus, but you know I don't like wasting time, so we're going to hop right to it. If you want to know more, we'll talk later. Right now, we're going to start on the broad indices, starting with the S&P. Clearly, we are rolling over, as expected. No surprises here. We got a bit of a loose horizontal support that we're resting on right now. It's temporary. Remember, when it started rolling off, we talked about it. You know, you might get some chop. You might go get some reflexive rallies. You know, this is not going to go straight down necessarily, but the momentum is down and we can expect it to go down further. Long term, I think what I'm looking at, and you can look on any time frame, it's broken all support, right? With the exception of this kind of guy right here. We're going lower. I can tell you, you know, I told you guys I had a video coming, okay? And I was going to kind of give you guys a big update, get into why we need to pivot from the Fed. That time is behind us, right? Focusing on the Fed is now behind us because that the damage that they may have intended to do, anything they may have wanted to break, that's now locked in. It's baked in. You can't go backwards now. So focusing on the Fed is no longer relevant. You got to understand, guys, the time to focus on the Fed was way back here. Okay, when we were breaking this 40-year trend on interest rates. All right, and I don't know where my line went. We could put it back real quick. But once you broke this guy, that was it, all right? That was the time to be focusing on the Fed. This is what we used to predict the broad sell-off that started back in April, all right? We knew that this was coming and we prepared for this in advance. Now, it's so funny because nobody wanted to pay attention to this before. Nobody wanted to listen to this before, all right? And then as soon as it happened, as soon as it broke out, now suddenly everybody's a bond expert. It's kind of just like that virus. Nobody wanted to listen to the fact that it was coming, but as soon as it came, you know, 3 days later, everyone was a virologist with an opinion. So you need to start fading this. This is noise now. And this is evident in the fact that the way the market is treating it. Okay, so you have broken a paradigm. That was the significance of this. That was why this was such a big deal. You have broken a paradigm of continuously lowering interest rates over time. Okay, this was a massive trend. Once that paradigm was broken, that was a big deal. Well, the market has now kind of come to grips with this in a way, and it's been playing this game of chicken with the Fed. And right now, after the Jackson Hole speech, the Fed is winning the narrative that they'll do whatever it takes. But remember, something that we have always talked about on this channel, especially if you're new, you have to understand the difference between reality and narrative. Narrative is more powerful than reality because it's what people talk about, it's what people believe. All right, so that it kind of fulfills itself. It's a self-fulfilling word of mouth. It's a narrative. In the end of the day, fundamentals always win. Okay, a good example of this is how Tesla trades or did trade more than all other automobile companies in the world combined. All of them, one. Right? They had a fraction of the market share of automobiles out there, yet they were worth more than all of them combined. All right, so obviously this is not fundamentally realistic. This is a substantial bubble. It was overvalued by every metric. But if you traded based on those fundamentals, then you missed massive gains because you did not understand the narrative and you failed to trade it. So as a good trader, yes, you need to understand the difference between these two things so that you can distinguish them. And this helps you appreciate where you are in the cycle or the price action or whatever it might be. Or when you might be reaching the top, when it starts to get closer to the fundamental underlying truth becoming inevitable, right? To kind of win over the narrative. This is so important. Most people, 99% of the populace does not understand this. And that's why I talk about it all the time. That's why I preach about it so much. It's why I try to reinforce it as much as I can. So where am I going with this? Well, the Fed has a ceiling on rates. So despite all of their talk, which is all it is, they can't raise too much more. You have to understand it's the Fed's job to fund the federal government, all right? Interest rates get too high. The Fed can't afford their own debt. They cannot afford to borrow. This is especially important as rates continue to rise, okay? So as asset prices fall and everything gets nuked and the economy slows down, the tax receipts for the federal government go down as the price to make up the difference and borrow goes up. So this is unsustainable, especially with all of the sovereign debt. I think we're at 123% debt to GDP right now. This is down from about 135, but it's still massive. And you have to understand historically that any time a nation has reached this much debt, right, they have defaulted on that debt. I think all but one nation has done so, and they did so within 7 years. So you got to understand that the sneaky thing about inflation is that it benefits the government, and the government actually needs inflation to handle their debt. And this is inevitably, most likely, Occam's razor where we're going. So you have to understand that this is about to change, but it's not going to change for the way and the reasons that people think. Now, maybe sometime back here in this part of the cycle, you could have been looking for a Fed pivot to essentially call their bluff and say cheap money's here to stay and let's keep the party going. That was true back here, but that's not true here. All right? The situation has changed. The world has changed. Europe has changed. Everything has changed. So yes, the Fed is still going to pivot, but you're not going to care for the reasons you would have cared back here. When the Fed pivots, and inevitably so, they have to, I still think that their next hike is the last. It's most certainly the last meaningful hike, right? You're not going to care about the Fed pivoting so much as you are the reason why. Because we have now reached that point where whatever it is that's coming is on its way, and something is about to break. It's baked into the cake now. The damage is done, and it's on the way. And people focus too much on the S&P. They're looking at, oh, I want, you know, the S&P needs to get to 3,000 because that's where the Fed put is. That's stupid. This is extraordinarily ignorant, naive, and a lack of understanding of how the system works and what's about to happen next. And I can tell you that with all confidence. I am quite certain, and it's rather self-evident at this point, that the first domino to fall is going to be outside of the system. It's likely going to be something that happens in Europe, and the Fed will be forced to help the global economy, not the U.S. economy. Okay, so the Fed, in a way, is going to get away with this. They're going to get their own pivot, right? They're going to get their own narrative to get them out of the corner. Now, long term, this doesn't really help anything, but you have to understand where this is going. And all of that is to say that the market has a lot further down to go here. Okay, at least the bare minimum retest of that 3,600 level on the S&P at a bare minimum. Okay, and that might not seem like that's that far. But it's a lot of damage. We could be looking potentially to set new lows here, and that's a very real possibility. Now, how does that impact the types of investments we make here on this channel? Well, it's kind of twofold. I think in the case of gold and silver, if and when we set this new low in the broad markets, you're going to set a secular bear market trend in the broad indices. And once the general populace accepts this, this brings on fear and uncertainty and doubt, and this will be a massive boon for gold. This will be a massive boon for silver. And depending on whatever the event is, will dictate strongly what happens next in oil or energy broadly and uranium. You would have to believe that long-term, these are still extraordinarily bullish, strong things to invest in, but the immediate action, right, the near term, could go either way. It really depends on what happens and what breaks. Okay, so you have to appreciate stuff like that. There's nuance to all this. The world is big, it's complicated, and there's an extremely high probability that things won't go the way we expect them to, or what makes the most sense. You can think of a black swan type of situation happening. It's quite possible. So all of that out of the way is just to say this, is just you need to get ready for things to break, and you need to get ready for problems. Okay, you got to pivot from the Fed. The Fed is officially irrelevant because they have used the maximum power at their disposal. Okay, they have reached peak jawbone. All right, Powell can't come out and say anything stronger than what he said last time. That was his last shot. All right, on a narrative basis, fundamentally, or excuse me, on a fundamental basis, there's really nothing else he can do from here. So you have to appreciate that this next Fed meeting is coming up here in a few weeks. I think it's 21st, 22nd. That means we'll get the rate hike on the 22nd. Okay. From there, you have to go another 6-7 weeks to the 1st of November, the 1st and 2nd of November. And you have to understand, guys, that 6-7 weeks from then, which is what, 9 weeks or something from now, that's basically 1,000 years in these markets, right? Do you understand how far away that is and how much can break and how many things can go wrong between now and then? Just be patient with the understanding of and recognition of the reality that we're living in right now, and be prepared for it. I think really big things are coming in gold and silver. I think in uranium, the situation might be a little different. So let's check it out. All right, guys. So the last time I left you on uranium, we were right here at this candle, and I had warned you not to buy here. All right. My base case was that we would come back down to the trend for another potential accumulation opportunity. And I had said, look, if you want to buy, don't FOMO, at least get the break. All right. At least get the break and see what happens. Well, since then, in a lot of these equities, we're roughly at the same place. So here is Energy Fuels. And I just want to point this out to you. We're going to go down the list like we usually do. We got a breakout. All right. And then we had a bit of follow through, but we are starting to roll over and we are now resting on these breakout necklines. This is okay, but it would be a lot better if you didn't have all of this divergence in the RSI that we're getting. And we're going to see that across the board as we go through the charts. And if you look at the weekly candle, for example, this is exactly the kind of thing that I warned you about early on for a long time, was the potential for this peekaboo. A peekaboo is what I call it when you break out over a trend line and you fall right back and collapse below it. You get a peekaboo. This is a fake out move. The problem here is that you're seeing this in a lot of equities, okay? There are a handful of exceptions like Cameco and Global that we'll get to as we go through the video, but this is a theme that's pretty consistent across the board, right? And you see a lot of this divergence on the RSI. So remember, a bearish divergence on RSI is always on the top. So you see as the price goes up and up over time, higher highs on the price, you have it flat on RSI over the same trend, all right? And this can be a little ambiguous because RSI does reset. But anytime you have a time frame as short as this one, when you came and set this new high, you should have set a new high on RSI over this one, all right? You just should have. And this showed immediate weakness. All right, and so that told you were going to at least get this move. Well, now that we've gotten it, what happens next? Well, let's go through the charts and take a look. So in the case of Cameco, I will tell you that in and of itself, it's doing a pretty good job. All right, so remember, way back here, we predicted this double bottom pattern. All right, and this pivot point right here was always going to be significant because that was going to be our potential breakout point from the double bottom. Well, as you look at some of these other equities, this double bottom really kind of failed early and morphed into this inverse head and shoulders pattern, which is now the play. Well, this pivot point here, this target on the double bottom pattern, is still significant, as is evidenced by the fact that as we go through these charts, equity after equity after equity is getting to this point and failing. And what was always the rule at this price point? If we fail, we bail. All right, we've known how to play this all along. And again, with the exception of a couple of names like Cameco, everything is failing. So let's just go down the chart here. URA, it got up here, didn't even quite get there. It was denied. It failed. It has rolled over. It is now resting on the 200 on the daily. But again, you had this weak RSI divergence here, which is a really bad sign, especially on what's supposed to be a breakout, right? This was an ugly, ugly tell. And by the way, I know a lot of you come just for YouTube, but you know, I'm on Twitter as well. And so since I was out of town, I couldn't make these videos, obviously, but I did post on Twitter for you guys, updating you kind of my best attempt at a play-by-play on how to play this. And if you go and read it, you can see that I encouraged you, do not chase this move. Do not chase this move because it looked pretty weak. And already we are rolling over. Again, we are back at the kind of the same price as that last video I made for you guys. I told you not to chase it. So this is effectively, as we go through the charts, going to equate to a new reaction moment. All right. So you're getting strong potential here for a failed breakout. All right. Another failed breakout. And I have to be honest with you guys, it doesn't look too good. I mean, the chart is pretty clear. You go back to the weekly, you're getting clear peekaboos. I mean, it doesn't look too good. You're getting long upper wicks on the weekly. And you have to appreciate too, guys, that you used a lot of energy to get up to where we are. And so the likelihood that we take another leg up is smaller than going down, right? Because you have to appreciate how many buyers are left. The bull case would be, if you look at something like Cameco, the bull case would be that you could come up here, continue to hold this breakout level, which it has so far, right? You can see that it's tested multiple times and it's closed above. That's very healthy. That's good. But again, the RSI is telling you that it burned a lot of strength to get here. Now, in the case of Cameco, the chart broadly looks pretty good. But your best case, your bull case, would be to essentially consolidate sideways for a bit, let the RSI calm down. And really what you're doing when you're consolidating like this is you're telling the market that this is a confident level to accumulate, okay? Because if you can go sideways and hold this level time after time, the market's telling you that this level is strong and it's going to hold true, right? And you can have the confidence to buy on it. And so this gives people the confidence to start getting back in and potentially take another leg up. So that's kind of what you'd be looking for. I think if you were to get another just random kind of out of nowhere shot up like these were, and you come up and test something like this 3250 level, especially if you start putting in any kind of an immediate wick, you got to get out. All right, you got to get out because this thing is probably doomed. All right, so here's what you're doing. If you're not in, you're not getting in. You can't. I mean, you can't. This is a time to hold. Like I had said on Twitter here, you know, I've got yellow flag up. Yellow means hold or trim. All right, because if you accumulated down here with us on this channel, like we've been doing time after time, then you're up big. All right, you're doing pretty well. But other than that, you're at great risk of downside if you buy here. All right, so really the only people who can afford to see what happens next are the people who have enough cushion to allow this to maybe break on them and then make the decision to get out. Right, but if you're not already up, then you're taking a big risk. The best thing for you to do, if you really have to get in, is just continue to wait and be patient and see if Cameco can hold 28.20. All right. Cameco 28.20 is the new $20 like it was back here. All right. So you lose this, you're probably going to fall quite a far. Right. There's a long way to go just to that 50. Right. So we'll just pull some tape on it and see. I mean, it's another 12% down. And once you fall, this is technically a failed breakout again. Another failed breakout. So it's hard to imagine it would only fall that far. You understand? So uranium is a solid yellow flag right now. Again, you go to something like NXE, you know, it failed to even hold its 200, which it has failed to do multiple times. It was denied rather strongly. And again, it did so on diverging RSI. We'll switch to the weekly and take a look. Look at that upper wick. That's pretty ugly. Again, failing to get above or even keep the 50 on the weekly. Not too good. It's struggling to hold its new breakout level here at 408. Again, you had all of this volume, and all it really did is give you long upper wicks. All right, and so that's not a good look. And again, when you have this diverging RSI, which is a theme across the board, all right, it stands to reason that you lack the strength to really take another leg up. And if you do, it will probably be an opportunity to sell. All right, so if you're holding and you're deep in the green here, my advice would be to look for an exit, okay? So if you can afford a little bit risk to the downside to lose some of your holdings, okay, that gives you the flexibility to see what happens next, all right? Because these 2 days right here, right, that prior Wednesday and then the subsequent Monday of this week were a testament that this stuff can come out of nowhere, all right? And you can get these huge moves up effectively out of nowhere, right? So that's a testament to news of impacting markets and causing big moves, all right? So you might get something like that again. I don't know. I can't predict that. But what the chart is saying is that without that and the follow through of it, the sector is broadly kind of weak. Now, again, much in the case of Cameco, like I had alluded to, you know, in and of itself, it's doing okay, and it has a chance to consolidate and kind of rest and prove that this new support is strong enough to kind of just build strength for a bit and take another leg up. That's a possibility, all right? But again, you lose 28.20 and it's kind of game over, bad news bears. But there's nothing wrong on the RSI. It looks fine. It looks otherwise healthy. This is something you really want to be holding right now as Cameco, all right? Similarly, you look at something like global. Now, global managed to break all relevant levels of resistance, all right, including that key pivot moment of the double bottom target. All right, so it broke above it. It has now rested on it twice in a row. This is pretty good. All right, this is pretty good. It's above both of its moving averages, and the RSI on the daily looked fine. All right, you don't really have the divergence like you have everywhere else, but if you flip to the weekly, that is a big old peekaboo. All right, that's a big peekaboo, and I don't like it. However, the RSI is not telling you that it's a weak move. If you're holding, especially if you're holding down here and you're in the green, you can afford to see what happens next. You can afford to check it out another week. But look, I will reiterate, you are not buying uranium right now. You're not doing it. You can't. I cannot in good conscience tell you to do that because the charts have too much confluence of mixed signals and weakness. This is not what you want to see on a breakout, okay? Especially consider, look how, as much as we've talked about uranium, as much as we've predicted and called way in advance, all right, part of that had to do with all the confluence in the sector, and it made it very easy to do that. But right now, you don't have that, guys. You have mixed signals. You have complete failures. Look at this. Look at UEC. So it breaks the neckline, all right? It hits what's effectively a double confluence of overhead resistance on this brand new ascending channel right there. And the horizontal resistance of what? That double bottom, or excuse me, yeah, that double bottom target we've been talking about for months. All right. This is more key than ever. And everything is failing with the exception of a couple. Okay. And that's not a good look. And on top of that, you have diverging RSI. As you break back below the neckline, this is effectively a failed breakout again after failing the double bottom, that you're now failing the inverse head and shoulders. Bad look, guys. And this is why I warn so much about this peekaboo, because I've lived through this enough to know how it works. And this is why you have to get, if you break above, you have to hold that neckline. You have to hold it, retest it, and then ramp again. Which is why it's curious to look at something like a global, which is on the daily still doing that, right? It still has a setup. There's nothing really bad in the RSI. It has an opportunity to cool off and trade sideways for a while, much like Cameco. But by and large, the rest of the sector doesn't look that way. We'll look at Dennison. Look at where Dennison failed, right here. And what did we say about this level when we got there? We've been looking forward to this level right here since back here, right? We knew whatever it ended up at, that's what it was going to be, right? Well, it's failing. It was denied. It wasn't just denied. It was denied rather hard, and it fell back below its neckline, and it's effectively sitting at it now. It's like some nuance of moving a line, you know, a millimeter kind of thing. It's like whatever. I mean, this is not a good look. And even the equities that have a healthy RSI are still overheated, right? They're very high. And there are very few occasions on any of these equities when the RSI gets this high on the daily where it doesn't sell off, all right? So between the multiple failed breakouts sector-wide, all right, between all of the mixed signals, between the divergence in RSI, as a cumulative total, looking at the whole sector, it doesn't look good, all right? And, you know, I got to say, this is exactly what I warned about, is this failed peekaboo breakout. And this is why I told everyone not to chase, all right, because it just doesn't look too good, all right? So to reiterate one last time, in summary, you are not buying uranium here. You are looking for an opportunity to sell. I think that if you're underwater, and you know, if you bought somewhere up here, your best shot is to hopefully get another one of these ramp days if you're lucky. If we do, I really doubt that it will hold. I think we'll continue to see divergence in the RSI. You might get one more ramp up before it sells off more long term. But you're looking to kind of get out as high as possible, because I can tell you, if we fail again on this, it's going to look ugly. And I don't know if it'll have the strength to recover. Now, we'll have to play this day by day, right? We'll, you know, if by the time we get there, the charts have changed, then we'll adjust that. But my gut impression is that it doesn't look too healthy. And then look at SMR. I told you clearly that this was going to sell off. In fact, I told you to sell it because this was especially clear, right? You had clear divergence on the RSI. It looked super weak, and it sold off. Let's see, that video was right here. It sold off as much as 18%. It is now down 11%. But look at that. Look at that divergence. Check it out on the weekly. This is an indecision doji resting at the top of this trend. Remember, that was the second target if we fell below the 50, yeah? So, you know, look, I just think that uranium has a yellow flag, okay? Uranium has a yellow flag, which means hold or trim, but certainly you can't buy. We'll have to keep a close look on this. Now, you know, I just don't see it. All right. In the case of Sprott, this was another update I made on Twitter for you guys. I made it right here. I said you only had another 2% to go before you hit key resistance. What a coincidence of that, huh? And as soon as it did, it was denied. And it's been rolling over ever since, falling from a high place on RSI. It needs to cool off. You know, I'm not telling you that uranium's going to sell off 50% from here. Okay. Don't misunderstand what I'm telling you. We don't know that yet. But what I can tell you is that all indications are pointing to a failed breakout. And if not for the sector-wide, then certainly for a lot of the equities within the sector. In fact, if you look at the stark contrast to some of these positioned producers like Cameco or near-term producers like Global, there's a difference in the charts. And my gut impression is that the uranium sector might be decoupling from itself. So you're going to get this separation potentially, if the charts keep playing out this way, of you know, the rising tide may not lift all boats anymore. I mean, you might see a situation where Cameco continues to consolidate while everything else broadly may sell off. All right, or Cameco may fall 2 or 3%, while the rest of the sector may fall 10 or 15. And this is a possibility that the charts are saying exists. And so it's something to be mindful of, because we could be at the precipice of a major trend change in the sector. A couple of companies we don't usually talk about, I'm going to incorporate just for more proof of confluence within the uranium sector. So in this case, we have Paladin. You see we reached the top of this channel. So we essentially hit the same kind of key resistance we hit in all the rest of the sector, and it's rolling over in the same way. You had, once again, bearish RSI divergence, and it's showing near-term weakness here. You know, you're getting essentially the same kind of test. It showed the same inverse head and shoulders pattern here. You can see that right there, though I don't have it drawn. I'll go ahead and stick a line in there for us just to help make that clear. Right? So inverse head and shoulders here, right? And we essentially got that potential failed breakout with a retest. But again, you have diverging RSI. It's already rather high. We come to the weekly, and you can see that we're showing the same potential peekaboo again on the weekly time frame. So not a good look. Come to Lotus. Now this one's really interesting. I don't know if there was any news about Lotus or not, but you can see that it fell out of this ascending trend line. All right, so quite bullish for a while on a clear trend, and it fell out. It came back, tried to break back into that channel, and was denied harshly. All right, and again, you had the same kind of weaknesses you know, that you see across the board. So just to see this failure over and over and over just does not bode well for this sector. It's hard to be confident in this right now. So just to reiterate one more time, you're holding, you're trimming, you're selling. Okay, so the last time I left you guys, I had pointed to some ratios of the GDX, which is obviously the gold ETF, compared to other sector-specific ETFs like uranium, energy, tech, etc. We're going to dig into even more today, because it is a confluence of trend that's happening with GDX being oversold to essentially everything. So starting here with uranium, we have had a clear uptrend for a long time. Now, part of this uptrend had to do with the falling price of uranium being in a bear market. That's fine. But regardless of that, it is oversold to uranium stocks. GDX is oversold to uranium. Now, whether it turns around and comes all the way back to the top or anything, I don't know. I don't know which one's going to outperform the other over the long term. I can't predict that, but I can look at the chart and see that it's oversold, especially over the amount of time that it's been selling off. Okay, and just stick with me as we kind of go through this. Looking at GDXJ, which are energy sector stocks, okay, especially oil, you can see that coming back to November 2015, we have a trend that's threatening to be broken here. It is being broken. As the RSI is begging for a rebound, and the breadth shows you that we are the most oversold almost ever. You have to go back to really the beginning of 2015 to find this level of being this oversold. Now, why this is significant to me is if you look at equities like Agnico Eagle or First Majestic or many big names across the gold and silver space, you'll find that exact same level of confluence where the technicals we're seeing today, all right, in terms of trend support and the confluence of RSI levels and the confluence of breadth, all point to this 2015 marker, all of which started a massive run. Okay, I don't think that this is a confluence. I think, I'm seeing a lot of people compare gold and silver to these other eras in time, and yeah, maybe that's true. Maybe I'm missing something, but what I can see for myself with my own eyes is that we have strong confluence of a lot of things pointing to 2015. And 2015 was a great year to be accumulating gold and silver stocks. And I think we're at the same place. Let's move on. So this is the GDX to XLK. These are our tech stock ETFs, all right? We're oversold here too by every metric, with the potential to be putting in a double bottom, which rests, of course, inside of this descending wedge, which is begging for a breakout. All right, this is a big deal to me too. Check this one out. Let's look at the GDX gold ETF compared to the COPX, which is the copper ETF. Do you see a trend here? Look at this. So we have rounded bottoms twice in the past, which have led to massive rallies. And it's doing it again, right? It is oversold again. You effectively have, it's not exactly right, but it's kind of a triple bottom here, all right? And you just cannot help but notice what's staring you in the face, all right? In confluence with everything else that we've seen so far and we'll keep seeing. And again, something interesting here is as the price remains essentially flat, the RSI on the bottom continues to rise. And this is a bullish divergence that's building up here. So all indicators are telling us that this is, in fact, a repeat of the prior two instances of the same pattern and that we're setting up for a run up. Let's look at the GDX to the DXY. Okay, look at this. You have to go back to 2018 to find this moment, which, by the way, was a pivot moment for a new uptrend. And you have the same kind of oversold levels on breadth. And we have to go all the way back to 2017 to find that level of being oversold. Look, this has broken down so far that it is impossible to argue that it's not oversold relatively. So once again, GDX is oversold on a substantial basis compared to other massive assets. Let's look at the GDX compared to the S&P 500. Now this could constitute a triple bottom. All right, so you're falling from a very high place, putting in what is tentatively, roughly, a triple bottom. We're at this same key level of support here that we have come to several times in the past, all of which have led to massive rebounds. Now, you could still fall a little bit on the RSI, but nonetheless, on a price basis, on a ratio basis, we're here at the bottom. And I think that this is important to consider going forward, as the GDX is essentially oversold against absolutely everything in a time in which we need to be looking for value, as the market is essentially in a everything bubble. Now, of course, notice the confluence of being oversold at these levels as we incidentally test these same key support levels in the equities themselves. So looking at SIL, this is the Silver Producers ETF, and we are retesting these levels here. And so we broke below, and then we got the close above. So that's a good sign. But remember, these technicals, I told you in my last update, I told you for the last few updates, that if and when we came down and retested this level, all right, we would be just as oversold, if not more oversold this time than we were this time. And as we go through the charts, you're going to see how that's already panning out. Because look what's happened. We already have to move our basis lower, all right? And look, 2018, that's the same confluence that we saw in XLE, I believe it was, right? So if it's not 2015, it's 2018, and they're all flashing the exact same signals. I think we are in hard accumulation mode here. Look at the breadth. The breadth has very rarely broken below. That doesn't mean it can't break below. It doesn't mean it can't sell off lower. That doesn't mean we can't sell all the way down here. All right, that's not what I'm trying to say. But when you understand the fundamental situation that's happening in the broad macro environment, as Europe collapses, as this energy crisis unfolds, as the Fed breaks everything, as this global culmination of events comes to a head together at the same time that we reach these critical levels in these equities, as they're screaming these technical basis of being oversold on historical metrics that we can refer to on the charts and see what they did at those moments. Listen, guys, I am green for go on gold and silver equities. I think this is accumulation on, okay? And we might have a little bit lower to go, but this is something I've made a point of before, and it aged well, by the way, every time I've said it, that even if we have a little bit more downside to go on the y-axis, which is to say price, maybe we do, maybe a little bit more, I don't think you're going to care in terms of the x-axis, which is to say time. Because you got to understand and appreciate that there's a big difference between holding something red for a year, right, versus holding something, you know, that went down 99% in a flash crash, you know, that immediately rebounded. That stuff happens sometimes, you know, this one-off event, something flash crashes, right? It's like you wouldn't even know unless you read about it. You know, it's like those kind of things don't affect you at all because it happened over a meaningless amount of time, right? It didn't affect your asset value at all. And I think you can approach it the same way in the gold and silver space, which is you can start accumulating now, okay? Because we're at the cusp in terms of time. I think September is it. And as we go through this chart and you see the continuance and confluence that we're looking at, I think we're there. I think you need to be accumulating here strongly. You just don't know when that day comes, that day away, when the news strikes and these dominoes start falling and the fear comes, okay? Because the fear is going to be a major driver of these precious metals. I know that. I'm counting on it. I'm convicted of it intellectually and emotionally. I just see it. I can feel it in my jellies. I know this is how it's going to play out. Something is about to break. We have the confluence of everything happening at once. This is strong accumulation mode in this sector. Moving on, SILJ. We still have a little bit of room to fall until we retest this trend, okay? So you're seeing some things out of sync, and that's okay. Some things are going to oversell relatively to others, but we're at these same critical levels with these same historical technical indications of levels of being oversold. So again, if you can come down and retest this, if you get that opportunity, I think that's something you have to take. I really, really do. Let's go to first Majestic. All right. So I have talked about this one a lot as well. Again, this has those same key confluences of oversold indications pointing to these same levels back here. This is 2016. You see what it did back here? You see what it did back here? Well, it's doing the same thing right here. All right. On a relative basis, on a time basis, on a breadth basis, on an RSI basis. All right. And when you see all of this kind of confluence, you're insane not to trade it. You're just crazy. This is exactly the kind of power that technical analysis gives you. It gives you the power to sniff this kind of stuff out. All right. And you can make confident decisions that you are investing at the right time, which is key, right? It's all about time. And it really is about that x-axis. The hell with the y-axis, right? Yeah, we're going to try to get the best price possible, but we want to get it at the best time possible too, right? And it's arguably more important. And I think we're here, effectively here. And so AG, sure, it might retest 630, okay? But if we zoom out on the daily and zoom in, you know, take a little closer look, we still technically have the possibility to get this inverse head and shoulders to play out. You know, I'm going to let it do its thing and see what it does, but that possibility is still there. If not, I would fully expect it to come retest this level, and I think that'd be a great thing because if you missed it, here's your second chance, all right? And the technicals are saying that there's room to fall there, and if the broad market starts to sell off real ugly next week, I could expect to see some droppage there, and we might come down here and test those levels. I think that's a good thing. Remember everything I had said prior leading up to this. Endeavor, we are hitting key levels on the bottom of this channel. I think that's very good. We're holding strong in this channel. I think it's a reliable place to add and accumulate for major potential swings in the near term, right? And, you know, the technicals all look great. Let's come to the weekly, all right? And so, you know, this looks good. On the extreme, let's say we did break. I think it would make sense that you might come and test this, all right? So that's another 20% down. So that's a pretty rough case. But I think that that would be, you have to appreciate every situation, right? So we have to appreciate downside possibility. So sure, something like Endeavor might come down 20%. I don't know that it does. I really don't. That's a hard sell for me, but it's possible, all right? So we'll keep that kind of possibility in mind. But again, if it did, I can almost guarantee a V bottom, because whatever causes that event is going to be exactly the kind of event that would make you want to own this stuff in the first place. And so you get the initial sell-off. It'd be no different than the COVID, all right? It would be no different than this. As soon as you hit that critical level, you're going to rebound so hard, all right? Because whatever it is that's going on is exactly why you'd want exposure to the metals in the first place. So again, on the axis of time, it's going to be irrelevant, right? Because even if it did drop on you 20%, which I think is doubtful, but it may, you're not going to care in terms of time, all right? You're not. I just see something like that playing out that way. I'm convinced of it. Hecla, again, on the weekly, you know, it points back to these same levels. There's 2019. Let's come into the daily here. All right. So we still have the potential, sort of, not really. Hecla gives more of an indication that we're coming down to this retest, all right? And again, that's a good thing. It's a better buying opportunity to buy more, right? Get more for your money. So I don't think the chart's broken. I think the chart's healthy, okay? You look at the RSI, you don't see any problems in gold and silver like you see in uranium, like none, all right? It's just trading, okay? It's going up, it's going down, and it's putting in significant historical analogs to relative strong buy points in the past. I think it looks extremely good, okay? So whatever happens in the near term, I'm not worried about time. Just accumulate, accumulate. We might come down here. Pause is a good example of that. All right, I'm still looking at $14 on pause, and I haven't pulled the trigger on it yet. In fact, if we manage to get lucky enough to get another big leg up in uranium, I am going to absolutely rotate funds in the gold and silver sector, and pause is probably going to be one of them. It's tough to pick right now. You know, that's kind of how it is. But again, looking at the weekly chart, oops, I just moved my stuff around. Looking at the weekly chart, RSI extremely oversold, and the breadth goes back again, all the way back here to 2015, the same place we put in this rally in Confluence with everything else. Guys, I just can't. You got to trust me on this one. I'm convicted. I'm convinced. The charts are screaming at us. The macro screaming at us. I don't think there's anything more bullish. I think you got to get in. GDX. All right, so it has broken below, and this is again where I told you, if we come back, we're going to be just as oversold, if not more oversold, and that's exactly what's happened, as we are now even lower on our RSI. All right, so it puts us even further back in time. What is this level? 2018 again. Look at that year popping back up again, and then we'll move our breadth back down to our new low level. All right, we're still around in the same place, 2018. Guys, accumulate, accumulate, accumulate. Whatever it does, it's going to V. I'm convicted of it. Agnico Eagle, my favorite producer. All right. So it's telling us, I feel like it is going to retest this trend. And again, I think that that's a good thing. We have the same levels of being oversold going back to 2015, kawinky dink. All right, same thing on the breadth, 2015. Again, what did it do there? Shot up. And what was the pattern back here? Double bottom. What's the pattern forming up here? Double bottom. Look, I'm all over it. All over it. Until this changes, until something blows up and breaks and breaks, it's like, this is a buy. They're screaming at you. They're screaming at you. Goldfields. It's been hovering down in this descending channel. This will inevitably break up. It's getting rather weak here in terms of being oversold. Weak's probably not the right word to use. I don't want to confuse you. Again, where does it go to? 2018. Get off the gas. Come on, are you kidding me? Do you see the confluence in this stuff, in the ratios, in the equities? Where are we at? What are we doing? You kidding me? Come on. March 2020 levels in terms of breadth. Guys, you got to be accumulating. This is your clarion call. This is your clarion call. This is green flag in gold and silver. Okay, green flag, right? Accumulate, buy. I would love to put in a gold flag, which is just buy hard, right? Buy. Don't accumulate, buy. But we do have a potential for another little bit down, like I'd been pointing out. But this is absolutely bare minimum green flag. This is accumulation hard. This is get ready for it. September is it. We could go through these charts all day. They all look the same. They're all screaming buy. All right. I am blown away by what I'm seeing in these charts, on these technicals, in the macro, in the setup. Is just like the universe is screaming of what's coming next. And get ready for it because it's on the way. Bullish gold and silver, green flag, go. I wanted to give you guys an update on why you didn't see any videos. I did try to post a community message to YouTube for those of you who don't follow me on Twitter to let you know I'd be out of town this week. That's why you're just now getting an update from me and you had a blackout week. But again, if you want updates from me when I'm out of town and I can't post videos, you can follow me on Twitter. You don't even have to follow me. You just log in. You don't have to have a Twitter account to see what I have to say. But that's a good way to keep up if I'm not putting out videos. I will always try to update you there. Beyond that, I will tell you, I've got some big stuff coming for you guys. I have 3 interviews scheduled out now. 3. So I think it's going to be really fun. I think you're in for some good surprises. I think that we got some big stuff that you're really going to enjoy. And I'm going to take the time to make sure that I do it right and that we put out good content for you guys that you can use to better yourselves and to make better informed decisions across the market, across the space, across commodities, and across the macro. Okay, so this stuff is coming. 3 interviews are scheduled. They're on the way. And beyond that, guys, I just want to encourage you to be patient in all things and never FOMO anything, and just, you know, always give yourself a good gut check. But, you know, things are breaking out there in the world. Okay, and I promised you guys that I was going to put out a big video updating you on the macro, and I didn't have time. You know, my best friend came in town from Spain. I lost the opportunity to do that, but I'm going to make it up to you. I'm going to put it out when I have time. But the summary of it is that you need to get ready because it's being telegraphed what's coming. Whatever is coming, it's being telegraphed. Okay, we have food crisis, we have water crisis, right? Drought. We have energy crisis. We have political crisis. We have war. And, you know, this is not fear-mongering, guys. You really do have to get ready because it's being telegraphed that we have major problems ahead of us. And I have hesitated to say that until now because I wanted to wait. I wanted to wait to see what would happen because a lot of people get ahead of themselves and they doom and gloom because they're fear-based people. I am not a fear-based person. I do not live in fear of any man or any situation. Part of that is because I'm prepared, all right? I have taken the time to prepare over the years that I don't care what happens. I don't care because I'm prepared for any event, right? I just look at things rationally and pragmatically to deduce what I think is a realistic probability. And I think we've reached the point where I've seen enough. I think that we've got trouble on the way and you need to prepare for it. You need to prepare for it in terms of physical goods. Sure, food storage and all that kind of stuff is a wise investment. If you haven't made anything like that before, you know, be spiritually prepared, right? Get yourself right with God. Get yourself right with your household. All right, and get yourself right up here, right? Be mentally prepared for whatever might happen. That way, when it does happen, you're not shocked. It's like these people, I tried to warn people that that virus was coming, right? By the way, I've never taken a shot. I've never even had a test. Never got sick. But I prepared for it, all right? I still prepared for it because I knew it was coming. I knew it would shake markets. I knew it would change the world. I actually thought it'd end up worse than it was. It's why I bought a lot of physical during that time. Worked out great. But the Fed printed their way out of it and did what they did, and here we are now. But all that withstanding, I say that to say is that I tried to warn people it was coming and they didn't listen. Because I was a doom porn, right? It's like you're just being irrational, you're scared. People don't understand I'm not scared of anything. It's like I am not scared of anything. I'm recognizing reality. And I would encourage you to try to do the same thing. Recognize the reality of what's coming. right? It's like we are in a global drought that's been ongoing in some places like California for 20 years, right? California has had the worst drought they've had since the year 800. You understand that? Europe, worst drought in 500 years. The largest freshwater lake in China is a desert. Now, that's been ongoing for a while too, but you can't isolate it and say that. Now, oh, it's been like that for... No, this is culminating. This is getting worse. It's developing over time. And so you not only have these water problems for the drought that affect crops. The crops in Texas are down like 40%. Our corn crop, everything's... Look, crops are down, yields are down, in part because it's fertilizer, in part because there's drought, right? So not only are you going to have reduced yields, you're going to have reduced nutrient density. A lot of this stuff you haven't even seen yet that's baked into the cake that's on its way. All right. And these droughts affect energy, right? They affect turbine water power, right? When dams get low, they have to reduce or output nothing, right? And so what do you do in response to outputting no power? You have to go buy it from somewhere else. Well, all the other sources of energy are already up. Now you're going to add more demand to that system? It's like... Think about rivers and canals. When the water is low, you can't put ships down these channels. Look at the Rhines in Germany, right? They can't ship. And so what happens when they need power? How are you going to ship the coal? You know, how are you going to ship the grain? These problems are not individual anymore because there's so many of them that they all compound on each other. And that's kind of the summary where we're going to go, but you need to hear it now because it's real and it's coming. And I just want you guys to be prepared in whatever way you think is good for you. It's your business, all right? It's your business. You can take this advice or leave it. It's your call. But this is my Clarion call. I feel responsible in my heart to say my part to try to bring this to your attention, all right? Because I think you should take it seriously. You don't want to be one of these people who, like when that virus came, you know, didn't appreciate or didn't take it seriously or were totally shocked because you'd never even heard of it until all of a sudden your football games got turned off, right? And your baseball games got turned off. And now it's like, what's happening? And then you freaked out because you didn't know, you thought the world was burning down. When in reality, you could have saw it coming 6 months in advance, right? Just like this. This is coming in advance. A lot of this stuff is baked into the cake already, and it gives you an opportunity to prepare in all the ways that you possibly can, but including being mentally prepared so you're not shocked, right? You're not broken by the event itself, and you can respond calm, cool, and collected like an adult with maturity to the situation, right? And you might have family members that may depend on you for that kind of calm, cool clarity. And that's what I'm encouraging for you to try to do. That's it. And, you know, I don't know how long it'll take for these things to come. I mean, just think about the livestock. I mean, you've got livestock being fed hay and grain and all kind of, you know, feed with prices that are 2-3 times higher than they were before. And, you know, by the time that this livestock is of age to sell and put on the meat market, I mean, you haven't experienced these prices yet. You know, there's a lot baked into the cake, guys. That's all I'm trying to say. So prepare for it. And then summary, just hang tight. Don't overreact to anything. I think there's a massive opportunity in gold and silver. Look for an opportunity to get out in uranium. And if that changes, we'll change too. But right now, that's what the signs say. Hang tight out there, guys. It's going to be all right.